What is going on, investors? Hopefully you guys had a great week out there. That is right. It is Friday. It's time to kick back and relax because it's time for the FAANG Stock Recap Show, where every Friday we recap all the major news from all the major FAANG stocks, NVIDIA, Microsoft, Tesla, all thrown in, and we recap the technicals. Let's not waste any time. Let's jump into things. We'll start things off with Meta, aka Facebook. Started the week at 308, melted up nicely. We'll talk about what this means from a technical perspective. Are we out of the little shorter term downtrend in this stock, or are we going to head lower? We'll talk about that. The end of the week at about $329 per share. Nice rally this week, about 7% on Meta. Now, they opened up their VR/metaverse space horizon world to the public. This is kind of an opening salvo to the metaverse. I kind of think about this like AOL chat rooms or something like that. A lot of you guys might not be even old enough to remember those types of things, but this is just kind of the entry level into the metaverse. There's some games, there's developers making things for this. So this is going to be something that really builds and kind of snowballs potentially over time, but it is interesting to see Meta move so quickly on these types of things. Now, Meta's WhatsApp introduces crypto payments feature with its Novi digital wallet. I thought this was interesting. Now, look, I'm not a big user of WhatsApp, but you guys know I like really nice watches, and there's actually really cool content on watch dealers here on YouTube. Some of you may follow some of these guys, and what I find with their businesses is what's really interesting is the secondary watch market, and I'm sure this is true for other segments of business as well, but those guys use WhatsApp almost exclusively to run their business. So a client, say for example, comes in, wants a watch, they have a bunch of dealer networks on that WhatsApp group, and so they spit out, say, hey, do you have this Rolex, or do you have this Audemars Piguet, or this Patek? And then they facilitate deals over WhatsApp. I was thinking this might be really interesting if Facebook can really turn this into a commerce engine. WhatsApp and even Instagram to a certain degree, and certainly Facebook as well, already a commerce engine. If they can start controlling the payment flow, and if regulators allow this as well, I tell you what, that could be a massive business for Facebook. And if they control that digital currency, oh my goodness, I think this is a fantastic, maybe an even better opportunity, certainly in the shorter term. Longer term, the metaverse is probably a more interesting opportunity. In the shorter term, controlling the currency on WhatsApp and Instagram and Facebook would be amazing. Again, we got to kind of cross our fingers as investors that regulators will allow them to go forward with that. Now, Instagram's Mosery, I think this was the guy's last name, to tell Senate panel of need for industry group on teen safety. So Facebook, and in this case, an Instagram executive, got waltzed up in front of Congress. This got a little bit of attention in the news, but there was other things going on this week that kind of sucked up a little bit more of that. But I was able to hear an interview between the two bipartisan senators. One's a Republican and one is a Democrat. So I actually think the odds of something getting done here is likely. But what I heard from them were just really, really soft things that Instagram can do, like issue time limits, allow for more parental controls. They weren't really looking to change Instagram's business model, so to speak, maybe changing the way the algorithm works and feeds you stories on Instagram. All these things would be very minor, and my guess is probably negligible from an investor standpoint. So I don't mind if some regulation goes forward on this front. And certainly if you look at this from a 30,000 foot view, you probably think that there should be some regulation. And considering you got a Democrat and a Republican working on this, wouldn't be surprised. But just based on what I heard from their interview, didn't seem like this regulation was that harsh. Now, moving on to Apple. Boy, this one is popping and it is broken out. Started the week at 165. Boom, we're now at all-time highs near $180 per share. We're at a 2.87 trillion, not billion, not million, $1 trillion market cap on this one. That means we're marching to that $3 trillion mark here really quickly. Now, right as we were setting up for today's show, Apple was hit with a class action lawsuit. This relates to their watches. They say apparently that the battery could swell. This is maybe why I prefer Swiss timepieces without a battery, but it says that, look, these watches, Series 1 through Series 6 and the Apple Watch SE, apparently the battery can kind of swell and potentially potentially detach the watch from the body and maybe could pose some personal injury. Now, Apple has had these types of things in the past. Would it necessarily be that big of a deal? My guess is they'll have to pay some fines, but all things being considered, not necessarily that big of a deal. Now, Apple in its golden age, this is according to Wedbush's Dan Ives, he says the valuation could go to 3.5 trillion. We just talked about how the valuation's at 2.9 trillion. So not that big of a stretch, but a good $600 billion more onto that market cap. That would take the stock up much, much higher than it is today. We'll see if that materializes. He's basing a lot of his analysis on not only demand for the iPhone, but also this upcoming AR VR headset, which we'll talk about more in a second from a news story that came from Apple. I would just push, it's all the products that they have going on. It's also the push into the higher margin services business, which we'll also talk about here in a second when it relates to a lawsuit. Now, Apple's iPhone demand is surpassing supply. This is also according to Wedbush. Now, we talked about how last week there was a story floated on Bloomberg that a lot of analysts took issues with, that reported that Apple was basically telling suppliers that Apple iPhone demand was not that great and things were going to start slowing down. Now, I saw a lot of analysts say that doesn't make a lot of sense. Apple does not necessarily call their suppliers and say, hey, we don't have very good demand. I don't think that makes a lot of sense. It didn't make a lot of sense to analysts. And now we're seeing this week the actual opposite, that Apple is seeing very surprising demand in their iPhones and analysts are starting to bump up the price targets. We're also seeing Apple stock, as I showed you here at the beginning of the segment, Apple stock has taken off. That's also telling me not necessarily all smart money, but there's probably some smart money piling in behind this name, understanding what the upcoming, we're probably only about 40 or 50 days away from hearing Apple's earnings. And people are starting to line up behind the stock, probably because they know those earnings are going to be fantastic. Now, the other positive news for Apple is they want to stay in this Epic Games lawsuit. Now, they were going to have to allow, now this relates to in-app purchases. So if you're playing a game like Fortnite or playing something and there's an in-app purchases for more coins, for anything, maybe even a subscription to Netflix. Now, Apple was forcing apps to use their payment platform, which takes a 30% tax or fee on every dollar spent through there. So you can understand, if you're Epic Games, if you're a Netflix, if you're a publisher of some kind of app that takes a payment, that's a major expense for you. And so obviously they're looking for in-app purchases where maybe they only pay a payment processing fee to like a Visa or a MasterCard, and that fee goes way down. Now, they were going to have to start allowing access to that starting December 9th, but they want to stay in a district court. It looks like they are not going to have to implement this. Again, I'm not a lawyer. I'm just kind of reading this from, again, just the layman investor kind of view, but it looks like that won't have to go into effect. And we kind of anticipated that a little bit here on the show. Apple has so much money, and I guarantee you their team of lawyers, while they may not be successful in the end, will be able to delay this for an extraordinarily long period of time. Now, Apple is starting January 1st, 2022, so just a couple weeks from now, they're going to allow in-app links for third-party payment platforms for reader apps, entertainment, music, books, and news. So certain categories are going to be able to do in-app purchases. My guess is Apple is using that probably as a test and to kind of see how many people, because Apple's going to allow you to choose as a consumer. Do you want to purchase in-app or do you want to purchase on the company's website? My guess is Apple's probably using this segment as a little bit of a test, and then they could see, well, how many users decide to go in-app versus using our platform, and maybe this is something that we can eventually allow. They know, I think Apple knows their lawyers are going to lose this, okay? Maybe they can just get it delayed in court for a really long time and keep it in limbo. I think they know in the end they'll probably lose this, so they're going to start rolling out some maybe test and see how that in-app feature starts to work and how that impacts their revenue on that app collection fee side. Now, Apple's Chinese success is, this was a surprising story, was tied to a $275 billion. And I know we're kind of immune to large numbers when we're looking at the budget deficit or what they're trying to spend in Washington on a certain bill, or certainly when we look at Apple's net income or their revenues. but a $275 billion between the Chinese government, essentially, and Apple. This included a $1 billion investment in Chinese ride-sharing business Didi. This was many, many, many years ago, back in 2016. Apple announced that. So it was really interesting to kind of see how this deal took place. It's basically a deal where Apple agreed to invest in China's country and in manufacturing and obviously investing in startups like Didi. And then in return, basically, I think, kind of get the Chinese government off your back. Now, I know I'm going to have comments down below talking about what's going on in China, talking about some of the social things. Look, for me, that's a completely different discussion. This is not the social justice investor channel. This is the investor channel. And I don't mean to be like so rigid, but if I pulled $1 out of my pocket, they don't care about politics. They don't care who you root for. They don't have feelings on those types of things. So me as an investor, I don't have any feeling. This is the investor channel. Now we can have political arguments some other time. We can have those discussions anytime, and I think it's worth having. But from the investor channel point of view, I don't mind a company I'm investing in, a company that I'm relying on for my retirement, to lock up its key market. One of its key, probably its second key market outside of the United States is China. That's where most or all of the products that this company manufactures. It's also adding more and more extraordinary growth to that revenue and operating profit side. I don't mind that. We can have the social discussions, but I will remind you again and again and again, your money does not care. And that's the mindset I often revert to as an investor, is my money doesn't care. And so me personally as an investor, I don't care. Apple is working on a second-gen AR headset to launch in 2024. This precedes what many people believe a AR/VR headset is coming in 2022. Sometime next year, Apple will release some kind of headset. Maybe you plug in your Apple iPhone on it. Maybe it's completely independent of that. But most people believe this is not going to be meant for the large consumer market. Probably more of a niche consumer, but also somebody that's looking to develop stuff for the metaverse. It'll give them a form factor to play with, and maybe something that's an alternative to what they've got going on at Facebook Meta/Oculus. So my guess is this not necessarily going to move the needle from a revenue standpoint and a profit standpoint over at Apple, but it could create new verticals, new products for Apple in the future. Moving on to Amazon. This one started the week at $3,344 per share. Ended the week actually right on that number. I actually have to double check that. Yeah, we basically went flat on Amazon. We'll talk about what that means from a technical perspective here in a second. Now, Amazon is shutting down Alexa.com. Good for SimilarWeb, JPM argues. Probably won't talk about that second part. But what a lot of people don't realize is Alexa.com was actually a web tracking. It basically gave rankings based on their internal data on how many visits a website was getting. Now, I used to work most of my income actually comes from websites these days, but about 15 years ago, I actually worked for a very, very popular, like I'll probably say a top 50 website in the world. I worked for that company and we relied heavily on Alexa, but times have changed. They started to name, obviously, all of Alexa products. Those are the voice activated products. It was a little bit confusing, I'm sure, for some consumers. They would maybe go to Alexa.com and see a product that was totally different than what they're experiencing at home with their home speakers and integrated in the car and those types of things. I think it's nice that Amazon is going to tie up the loose ends on this. I don't think this Alexa ranking system that's somewhat antiquated to an old style internet, while there's probably still some uses today, it's likely that you have other options out there like SimilarWeb that's probably doing as good or a better job ranking websites if you are into that type of things, but it's a niche vertical. Whereas back maybe 10, 15 years ago, it was a little bit more important. Now, Amazon was fined $1.3 billion for abusing online market power in Italy. And now $1.3 billion, we obviously know that Amazon has well north of, I think, about $100 billion of revenue, they're on a quarterly basis on a run rate that high. They've got massive amounts of revenue, but once you come all the way down to the operating profits and then all the way down to net income, $1.3 billion is actually a lot of money. Okay, now I'm not saying Amazon's going to go to the poorhouse on this one. They certainly could lighten up on some investments and pay this very, very comfortably. This is not going to hurt Amazon. And in fact, we didn't necessarily see the stock react negatively to this at all. But $1.3 billion is a lot of money. This is coming out of Italy. My guess is when you look at the balance sheet of Italy, it probably looks even worse than the worst penny stocks that are trading. It's probably disastrous. So that's why they need that $1.3 billion. Now, Amazon was accused of unlawful deception with ads in search results. This is here in the United States, a complaint according to the FTC. And I'll tell you just anecdotally, I was on Amazon the other day and I can't remember what I was searching for, but I was flipping through the results, and I sell on Amazon. I've bought ads on Amazon. I'm very keen to what they're doing from the advertising space. And I did note it, and this was before I read the story, ironically enough, and I saw a couple ads where I was like, wow, they integrated that ad. And now me as an advertiser, I'll be honest with you, I make almost 100% of my income from online advertisement. I do a little bit of e-commerce, but most of my income comes from online advertising. So I actually appreciate when I see an ad where I'm like, wow, that's integrated well. Wow, I want to click on that ad. I saw that on Amazon this week, so I can see how the FTC could take issue with that to a certain degree. Now, I don't necessarily think this is going to result in a $1.3 billion fine, which we saw in Italy. My guess is just some changing of an icon, some coloring, some border. This will be really, really minor changes, but I think this is a sign that Amazon is doing a really good job. When you've got the SEC, or in this case, the FTC coming after you because your ads look so clickable and look so good and are integrated so well into organic results, this is actually a compliment, okay? Now, they're going to have to likely make some changes, but this is a compliment to the ad people working over at Amazon. Now, Amazon's vans were sitting idle amid an extensive AWS outage. This was earlier in the week. This affected certain websites, but we also learned later that certain vans rely on AWS, obviously, in order to get the routes and where they need to go to deliver packages. Well, those were sitting idle, so you can imagine how much Amazon relies on its own server, so any disruption there hurts their entire business. Now, moving on to NVIDIA, started the week at about 281, ended up nicely actually at 302. This one's holding that level. We'll talk about it from a technical perspective, but this one's holding, man. And that is a very good sign. When your stock's up over 100% like NVIDIA is, well, it's kind of nice that it's holding that level. Now, EU top antitrust regulator is deeply concerned about NVIDIA's planned ARM deal. We already are planning, I think an analyst noted last week in a story that the deal odds of this deal going through are about 5%. We have to agree with them over here at the Investor Channel. Almost, I think, no chance this deal goes through unless the CEO, if the CEO can somehow convince China, United States, UK, EU to allow this deal goes through, he deserves a standing ovation and probably a raise. Quite frankly, I don't think he's going to be able to pull it off, but we're seeing the market doesn't really care because they know that NVIDIA, instead of owning ARM and then licensing that out, which is not that high of a profit business, well, they know that NVIDIA is just going to simply be able to still license ARM technology, and so is everybody else, and all things will remain about the same. NVIDIA will have a very, very strong position inside the chips and graphic processors and gaming and crypto mining and certainly autonomous cars as well. Moving on to Google, start of the week at 2,818, ended higher, very close to all-time highs at about $2,960. All-time highs are about 3,020 on this one. Now, Google is jumping, and so was Roku this week, as the two teamed up and they ended a long dispute that they had. This was related to YouTube TV and YouTube on the Roku platform. This didn't really necessarily have to do with money. It was really the way search results were being aggregated by Google, giving them preference on their videos. They obviously worked that out. Maybe some kind of terms were reached, and Roku subscribers certainly probably happy about that. Moving on to Microsoft, start of the week at 319. Is this right? Wow, the stock had nice recovery this week. We thought it could pull back. It said, psych, we're not listening to your TA. We are up big this week. That will be interesting from a technical perspective. We ended the week at 342. That said, it did a spin move in the key and then dunked on us this week from a technical perspective. We'll talk about what that means here in a minute. EU antitrust regulators said to give the okay for Microsoft purchase of Nuance. So here's one of those deals. This is a big deal. This was like a $20 billion deal. Yeah, $20 billion deal. But Microsoft obviously already knew they were probably going to be able to get this through. That shows you not only the sophistication, but also the awareness of Microsoft of what deals they probably can get through at this size and which ones they can stay away from. Hands up, claps up to Microsoft. They've done a very nice job acquiring that company. As we know, Microsoft, a $20 billion deal is mammoth, okay? But it's nothing when you look at the cash balance that these companies have. And then when you factor in inflation rates, we saw it today, I think it came in at about 6%. Well, look, if that continues over the next 3, 4, 5 quarters, well, a $20 billion deal today is a bargain, okay? You're actually getting that at a discount based on what $20 billion is going to be worth a year from now. And if you think inflation is here to stay for many years, well, it's just absolute fantastic use of cash because right now, these companies have a combined, hundreds of billions of dollars. Just Apple and Microsoft combined have hundreds of billions of dollars sitting on the balance sheet, losing value, okay? With inflation going up, the value of those dollars, that's what inflation is. Inflation is not price going up. It's the purchasing power of your money going down. And who has more money than anybody? It's these corporations. So we got to see them spend, okay? If we think inflation is here, we got to see an acceleration of spending that money because it's going down as we speak. The purchasing power of that money is going down. So Microsoft doing a deal like that, we love that, okay? And we hope that these other companies are able to put that capital to use to a certain degree. Now, Microsoft, I love this story. Microsoft will raise Office prices 20% unless customers have an annual subscription. So if you're paying month to month, you're going to get charged 20%. So this is a way for Microsoft to lock you into longer terms, get a little bit more visibility, get that money flowing into the door early. They have to recognize, I believe, on the balance sheet, a liability. Okay, if you buy a 12-month plan, the money comes in from a cash flow perspective, comes into the company right away. But on the balance sheet, they recognize the 10th, 11th, 12th, the months that haven't been delivered yet. It's recognized as a liability and then basically gets minused off as an asset at some point. So we love this. This will give them some pricing power. It'll also lock in customers for a longer period of time. Now, this is another pricing technique. Microsoft tries to get software pirates to pay for Office with a 50% discount. So they're basically prompting people and saying, hey, you're using a pirated version. Let's pay for Microsoft Office and we'll give you a discounted price. Another way to get customers in the door over at Microsoft. I like what Microsoft is doing. I can see why this stock is just absolutely soaring. Now, moving on to Tesla, started the week at 960 and then ended the week at 1016. Had a nice little recovery today. Talked about how we like this one. We like it. We don't love it. We like it at 1,000. We'll talk about it from a technical perspective as well here in a second. Now, Tesla stops taking new Model S and Model X orders outside of North America. They've essentially, I believe, exceeded their amount of pre-orders that they want to extend. Here's what we're seeing with Tesla. Okay, we're seeing deliveries extend out much farther. Okay, so if you put in an order for a Tesla, it used to be you could get it relatively quickly. And now we're seeing with the supply chains, those deals are getting extended longer and longer. And so what Tesla doesn't necessarily want to do is lock people in at a current price when 6 months, 12 months later, when those cars will eventually be delivered to those customers, well, maybe they could start charging $4,000, $5,000, $6,000, $7,000 more once those levels hit, because used car prices are part of the inflation index, and those keep going up and up and up. I looked on my Mercedes today. It was a week or so ago. I owe like $50-something thousand on it, but the darn thing's worth like $65,000. We're just seeing the price of used cars continue continue to go up. So guess what Tesla and basically virtually all car makers are able to do? Well, they're able to keep raising prices. So the last thing that Tesla wants to do is lock people in on a price today when 6 to 12 months from now, they might be able to charge that same consumer 5, 6, 7,000. I'm not saying this is all what they're doing here. There's more to this than what I talked about, but in general, that's how I think about it as an investor. Now, Elon Musk sold another $963 million worth of Tesla stock. He also teased about quitting his job, which I think was, I don't know. Elon's been throwing out some weird tweets. He's either been drinking or he's been having a heck of a lot of fun because his bank account is probably loaded up with all of his Tesla sales over the last few weeks. This guy has sold basically about $10 billion worth of Tesla shares. We talked about how that is to satisfy a tax liability, I should say, with not only here in the state of California, but also from a federal level. I've also seen commenters suggest, well, he moved to Texas. Now he doesn't have to pay personal income taxes. No. The state of California is not going to allow you, when you have a massive tax bill due, to just pick up and move to Texas. There, especially when you're mega rich like Elon Musk, certainly a more middle class average person like me, I could pick up and go move to Arizona. I could move to Florida. I could move to Texas and probably eventually very quickly get my income taxes transferred over to that state. But Elon Musk is not going to be able to pick up, when he owes the state of California billions of dollars, he's not going to be able to just pick up and move to Texas and avoid those taxes. That's not how it works. Trust me. He owes the state of California some money. He owes the federal government even more money. He's raising a lot of money by sales of Tesla, but I did see a news story that his stake in Tesla has not changed. In fact, it's actually gone up. So while he has sold shares of Tesla, the fact is he actually owns the same or more percentage of Tesla than he did before he started selling. Wouldn't you love to be in that position? Tell you what, it'd be great to be a CEO of a mega cap company. Now, Ford's CEO is saying we'll have the scale to EV capacity to beat Tesla. The Rivian stake gives them the opportunity at that. And so we've been seeing this lip service from Ford and from GM saying, hey, we're going to be here in 2022. We're going to be there in 2023. But in the meantime, Tesla is just doing this. And to me, this is a gold medal winning stock test. Okay. How much gold is Tesla having? We know that right now, when it comes to EV deliveries, when it comes to EVs profits, Tesla is like Michael Phelps. He's just loaded up with medals. But obviously we have worthy competitors that have been talking a big game for years now. Ford, GM, Mercedes just rolled out their EQS, which I think just looked absolutely fantastic. Lucid's car, very nice looking car. Rivian obviously delivering a small amount of cars as well. We're seeing the competitors start to step up, but it's mostly lip service at this point. When you look at the deliveries, when you look at the companies at where they're still miles and miles behind. So as we move into 2022, we'll measure these types of things. I am just still convinced that Tesla, and when we sit here next year, will there be more EVs on the road from Ford, from Rivian, from Lucid, from GM? I think, of course, but I think Tesla is going to be even exponentially higher than where they are. They have 2 factories coming online, one here in the United States, one in Europe, or in Germany more specifically. I just think that's going to add a ton of capacity. There's already an excess amount of demand for their cars. They have the supercharger network. They have the software. They have everything already in the place, while the rest of these companies are still trying to figure out how to ramp up. And I still think with supply chain issues, they're going to be ramping up into next year and even the following year. And if Tesla is any example to this, look at the Cybertruck. Look at every promise Tesla has made. It often gets pushed back a year, 2 years, 3 years. And we're talking about the gold medal winner. When we start talking about these companies that are still trying to upstart themselves, they're probably still 2 or 3 years away. I just think that. So we'll see what happens there. Now, Tesla, here's an example of this. Tesla sold 52,859 China-made cars. Now, that is down just slightly month over month, about 3% down month over month. Year over year, though, it's up 348%. But here's one I want to show you, okay? We talked about how they delivered over 52,000 cars. Well, in the same period, it looks like Li Auto delivered 13,500 cars. Xpeng did about 15,000 cars. And NIO did about 10,000 cars. Add all of that up, and you're still not very close to where Tesla. So Tesla is doing more in deliveries in China than the 3 incumbents there in China are doing combined. Okay, so this is just still looking absolutely fantastic for Tesla. And I think heading into next year, there's no reason to believe any of these companies are going to be able to catch up, okay? From a battery capacity standpoint, from a supply chain standpoint, from a charger and EV standpoint, from just a factory and capacity and the ability to produce and sell a large number of cars, Tesla is still the only company out there that can do this at a mass scale and a global scale. Not just here in the United States, but globally. I know I'm kind of pumping my own book, and I should stay it probably right in the beginning of this show. I am an owner of every single company that we talk about here on today's show, and so probably some of the things I say are slightly biased, but I'm probably speaking to the choir because most of you are revolved around this stocks as well. Now, Tesla falls on report that an SEC probe on their solar panel fire risk. Anytime I see SEC probe, I'm not too worried about it. The SEC, when's the last time the SEC's done anything to a company that's really impacted it? And especially when we're talking about like even a small to mid, and now we're talking about a mega cap stock. They don't do anything over there, okay? And there's a joke, I think, on one of these Wall Street movies that if you get a job at the SEC, it means you couldn't get a job at JP Morgan or, forgive me if you're out there and you work for the SEC. I'm not making fun of you, but it's the joke on Wall Street. If you work for the SEC, it means you couldn't work at Morgan Stanley. You couldn't get a job at JP Morgan. I mean, quite frankly, those people are outmatched when they go up against these companies. Now, finally, Intel CEO said the Mobileye IPO, so Intel bought Mobileye several years ago. It appears they're going to spin this company off into its own separate company. Mobileye, obviously very big in the autonomous driving space, similar to what Tesla has been doing. And the Intel CEO obviously talking up his own book, saying that the Mobileye IPO will create a company in Tesla's league. Okay, being in someone's league and winning the gold medal are two different things as well, okay? Just because you're 4 seconds behind Michael Phelps and you win silver doesn't necessarily mean you're going to make a ton of money. Now, I think Mobileye, whether or not I invest in it or it's a stock that I really like, I don't know. I think this will be absolutely beneficial for Intel, allow them to unlock some money. Intel's got a separate strategy. They're building foundries here in the United States. My guess, the influx of capital would probably be a very good thing. But when you look at Tesla again, okay, from an autonomous driving perspective, is there any company anywhere close to what they're doing? And no, okay, period. End of story. Absolutely not. And look out another year or two, I think the answer is probably still going to be no, believe it or not. Now, moving on to the technical segment of the show, kick things off with Facebook. Now, Facebook did bounce this week, okay? And so we talked about that right on the beginning. But what I want to remind you is this stock is still in a downtrend, okay? And so we're basically in this down channel, okay? Now, I want to tell you when we think this downtrend could be over. Right now, we're trading right here at about $330 per share. We've got overhead resistance we've got marked out here. This can fluctuate. Rounded off, it's about $10 higher at about $340. So we're sitting at $330 on the stock. Overhead resistance we're expecting at $340, but we've got to get above this cluster of highs, which is actually a little bit closer to $350. That would take out the previous highs. Now, if Facebook gets rejected here at $330, we are still in a downtrend on this stock because we have a high here, a lower high, and then we'll have made another lower high here. This is if we had lower on Facebook next week. If we had lower on Facebook, your buying opportunities are south of about 310, okay? I really like it, but it looks like to me, you'd have to probably pick it up intraday unless you have broader market pullbacks at about $300 per share. Anywhere south of 310 or around 310 is a buying opportunity. Number one, when I say buying opportunity, it is all based on your own portfolio portfolio and your own situation. And I know that goes without saying, but I'll expand on that just a little bit. If you don't have any shares of Facebook, especially if you don't have any shares of online advertising, so in this case, Google and Facebook, those are the two online advertising gold medal winning stocks. How you allocate between the two, I'll let you decide. But if you have no allocation into either of those two stocks, yeah, I like 310, I like 300. Now, if you're like me, you've been in Google for a long time, you've been in Facebook heavily for a long time, not necessarily would pull the trigger here. I might pull the trigger 1-2 shares if there's not a couple other stocks that I really like. It would just be a very small incremental add to the amount of shares I have. Some of you might be in that position as well. Now, one thing on the upside with Facebook, a break above this 350, really a break above 340. I wouldn't be super excited. I think we've got to get up over 350. That would take out the previous highs. Well, yeah, now I think the high probability you're retesting 380 on this one. So if you want to do this from a shorter term perspective, swing trade a portion of your portfolio, well, I think a break above 350 could add $20 to $30 to the stock price and retest these highs up here and then see what happens there. Moving on to Apple. This one is oh my goodness. We've been talking about this breakout for a while. I mean, we've been talking about this breakout for like 2 or 3 months. We had this level at 157 marked out, got rejected, came up to it. We broke and then came back and back tested right back onto 157. This is just, it's like you could put me on repeat on a loop. This is what we've been talking about. But once we broke above this, we were looking for the run and we got it. This thing went parabolic all the way up to about $180 per share. Now, when these things go parabolic, they can just run, okay? They can consolidate slightly. When we look at the NVIDIA chart, we'll see evidence of that. When we look at the Microsoft chart, we'll see evidence of that. And then certainly Google is probably the most beautiful example of how once it broke out, it consolidated up. We'll see if Apple's able to do that in the intermediate term. The higher and higher it gets, it basically cancels out this whole sideways consolidation we had after our post-pandemic run on most of these stocks. They made a post-pandemic run and then consolidated and chopped sideways for about a year. In fact, all these stocks have either broken above that, except for Amazon, which we'll talk about here in a second. So we're looking, the longer and higher we go, now this consolidation pattern is basically over. If obviously we have a mega market pull down, then we pull back into it. There should be a huge amount of support for this stock at these prices. So we like it when these stocks break out. It obviously makes our portfolio look good. Would I necessarily be buying Apple at these levels? No, unless I wanted to play kind of a momentum trade. I'm waiting for kind of a sideways, kind of a flagging out pattern, which will show you when we look at NVIDIA and even Microsoft to a certain degree, and that's where we can come in and buy again. Now, moving on to Amazon, still doesn't look that bad. Now, this one has not been able to get above the highs, but as long as all these other FAANG stocks have broken above, then the catalyst is there. The reason for this stock to eventually follow them is there. And we're also noticing kind of in the shorter term, actually the last couple months, we made a low here, higher low, higher low. That is looking good from a technical perspective. Now, if we break down below it next week, we're probably coming down to about 3,300. Anything 3,300 and lower on Amazon is your buying opportunity. Again, with the same rationale that we talked about with Facebook. On the bull case, we're looking for a break above 3,760 on Amazon. What would break it above there? Earnings news and a stock split. Okay, I don't necessarily think, because the stock split's been rumored for so long with Amazon, I don't think they're really interested in it. But if they do announce that at some point, yeah, you're probably breaking above 3,700 on this one. Again, pre-split, and it would be off to the races. The fact that this one has sideways consolidated for this long, I mean, this is going back to July of 2020. We've been consolidating sideways for a very long period of time. I would expect a big break if we happen to get above those previous highs. Moving on to NVIDIA, we talked about how this one is flagging out. So it made the Apple move. It broke above highs. Now, it never back tested to the previous highs, which we saw with Facebook, we saw with Apple. I think we saw that with Microsoft as well. So this one just did a clean break and it went whoop up like a hot air balloon. And now we're just consolidating really between about 2090 to 290, excuse me, and up to about 323, 325. It's a little loose up here. You could probably move this upper line even a little bit higher to about $330 per share. Anywhere in here, if you like this, if this stock, you don't think the valuation has gotten a little far out ahead of itself, the fact that this stock is up over 100% this year, for me personally, I'm just holding my shares. I have no interest in selling. I have no interest really in buying. I'm really looking to see if it can hold this 290 level, because on the bear case, if we break 290, there's like almost no candles here. I would expect a pretty swift drop. Now, would it come all the way back to the previous highs of 230? I don't think so. I think technically people would want to step in a little bit before that. But if we break below 290, I would expect much lower prices, and that could be incredibly bullish for NVIDIA, at least on a dollar cost average side. Now, if we want this like a Google to just continue to go higher, you're looking for a break above probably 330, probably more specifically above about 340. That would just mean this was just a temporary stop on the floor, and we're still going up on this one. We'll see what materializes with NVIDIA in the coming weeks ahead. Now, we've mentioned Google quite a bit because this stock was on just like one of the most epic runs I've ever seen a mega cap stock go on, quite frankly, especially over the last few years. Now it is starting to consolidate sideways. Our sideways consolidation, the bottom area of the zone is 2,700. We're actually towards the top end at about $3,000 per share. Quite frankly, I would anticipate this stock getting rejected at about 3,000 and coming lower anywhere south of, I would say there's an intermediate level here that's very soft. Anywhere about that $2,800 level, that can trigger where you might want to step in on this one. Even lower than that, 2,700, you get below 2,700, and then now we've broken this sideways consolidation, and we could head much lower depending on what is driving that move. On the bullish side, you're looking for a big break above 3,000, but even if you break above 3,000, you kind of need to get back into the previous channel, which the longer we go sideways is harder and harder to do. You'd actually have to get up to about $3,200 per share. This one, I think, just wants to go sideways. After you've had that big of a move in a stock like this, going sideways is no big deal. And I showed you with Apple, with Facebook, even with Amazon to a certain degree, pretty much all these stocks, when they go sideways, that is an excellent time to accumulate these shares because these companies are growing their revenues as fast as anybody on the street. They're wildly profitable. They're buying back shares. Some of them pay a dividend, and they absolutely have that cash flow and that cash on the balance sheet to survive inflation and all the rate rises, which we're likely to see all through next year. So Google on the bottom end, you get anywhere close to $2,700 on that one. That's the bottom end of a consolidation range I think we could be stuck in for a while. That is where I'd like to step in on Google. Moving on to Microsoft, this one had a complete reversal this week. We had it hanging out down in this range at the start of the week, and we thought that we could head lower. In fact, if I would have placed a bet on this one, I would have definitely expected it to head lower. Nope, psych, it reversed, and it reversed hard, and in fact did a complete reversal. Not only took us out down where we were down here, but we actually broke again above the upper end of our consolidation range. We're up here at 342. Now I think you really need to get above 345, which is only a couple dollars from where the stock is right now. You get above that this time next week, and I think, man, we're just going higher on this one. We could end up stalling out somewhere out here, and our just like the way we talked about with Google, how it's kind of in sideways consolidation. With Microsoft, you're somewhere in that 330 up to about that 340 range is where you're sideways consolidating. You're kind of flagging out sideways. We've seen Microsoft do this, okay? Had a big old run, consolidated sideways, big run. I think we're consolidating sideways here. And then if they can keep using that cash over at Microsoft, well, we could be on another big run. Again, this is the perfect example of why we like it when these stocks go on sideways consolidation. And that does not mean take your eye off the ball. It often means acquire more shares because, like I said, these stocks go on runs, go sideways, runs sideways. Google did that for basically a year, and we're seeing that in evidence of Apple and even Facebook to a certain degree as well. Now let's take a look at Tesla. This one is making a similar move, but it's a little further along than like a Microsoft and even an NVIDIA. So we broke to these all-time highs, but now we are in a downtrend, okay? You had a high up here at 1250, made a lower group of highs, and now we're at another lower group of highs. But from a technical perspective, this can be a bullish formation because what we are creating is kind of a pennant formation, and we're going to resolve one way or another. And I know you're not tuning into the channel for me to tell you Tesla's either going to go up or it's going to go down, because that's basically, obvious. Okay. But this formation is telling you that at some point here in the next couple of weeks, we're likely to see a resolution to this. We are going to break to the upside and likely retest 1150. And then if you can get above that, you're going to retest 1250 on this one. And now on the downside, you break right where the stock is right now. This $1,000 level is proving from a psychological perspective, and maybe even to a certain degree, a valuation and fundamental perspective, where buyers have stepped in, because we've seen over the last month or so, buyers have consistently stepped in here at 1,000. And so either that is going to hold and the sellers are going to dry up. And when the sellers dry up, that means the stock will break above to the upside. But if these buyers lose interest here at $1,000 per share, we have not a lot of support here, and we're coming lower, probably retesting the previous highs at about $900 per share. That's where I will step in again on this one. But if you do like Tesla, you're certainly underweight it. You've missed it a little bit. Let's say you want 5 shares of Tesla. This is a spot where I don't mind you grabbing 1 share of that, starting 1/5 of your position, and then kind of waiting and seeing. Like I said, I think this is going to resolve itself over the next couple of weeks. And look, even if you bounce here at 1,000, there's a strong likelihood we come back up into these areas of the previous highs. We could get rejected here at 1150. If we come up to 1250, in fact, I'd be expecting us to get rejected and then potentially coming back down here and retesting 1,000 again. Now, the other thing to keep in mind is we are simply still locked in this long-term uptrend that we've talked about for a while with Tesla. Okay. It started way back here, basically, that I think is like April or May of this year. And we've just steadily been in an uptrend. Now we're well above that uptrend. So even in the next couple of weeks, even heading into January, if we come back down to $900 per share on this one, we're simply coming back down to a trend line, which really could be drawn in maybe even a little bit lower. It could be down here, meaning the stock could easily come back into that $900 level. And it's simply just coming back, testing this trend line. That trend line holds and you just continue to walk higher. On the bull case, you're trying for a break above 1250 and start looking like this chart's like a Google or Microsoft or like Apple in the most recent times, where the stock makes a rally, consolidates sideways, breaks to highs, rallies for a while, goes sideways. That's what you're hoping for on the bull case scenario with Tesla. Hopefully you guys enjoyed this video. Have a great weekend. We'll be back again with more. Good luck with your investments.